Take a look at the stock market chart for Paytm. What do you see here? A constant decline in the stock price for Paytm. Now let me give you some numbers here. The issue price for the stock was 2150. The listing price was 1950. It got listed in the market at a 10% discount, which is still not a major cause of concern. But the low that the shares have hit till now is 850 rupees, a 60% destruction of the investor's wealth. Why did that happen? Why is market treating the Paytm shares so harshly? The answer to these questions lie in the business model of Paytm. So if you are someone who has invested in the Paytm shares or wants to invest in the Paytm shares, please watch this video till the very end. Through the business model, you'll understand exactly why the Paytm shares are taking such a beating in the market. With that thought, let's begin. So Paytm majorly has four business units. The first one is Paytm Wallet, where people can hold money in their Paytm wallets, transfer it back to their bank accounts, transfer money from their bank accounts to their wallets, and then use it anywhere they want. The second business is Paytm Mall, where Paytm wants to establish itself as a huge marketplace. Sellers would come to Paytm Mall, list their products, and those products would be available for buyers across the country. The third business that they operate as is a payments solutions provider. Here they enable easy transfer of money from customers to small merchants either through UPI or any other payment mode. The fourth and the last business that they have is Paytm Money. Here they provide brokerage services by enabling customers to buy stocks or mutual funds. Now these are the major sectors or businesses where they are currently operational. Now let us try to look at which are the major competitors for Paytm. For Paytm Wallet, it is clearly PhonePe at the moment. For Paytm Mall, there are huge marketplaces in the form of Amazon, Flipkart, Myntra, even Meesho for that matter has started to gain a lot of traction. As a payments solutions provider, you have PhonePe, you have Google Pay, even Bharat Pay for that matter. And last, as Paytm Money, they have the biggest player as their competitor, Zerodha. They have Upstocks, they have Grow, which also provide financial services to its clients. Now try to look at this summary. What do you understand from this? Too many competitors for Paytm. Each of the businesses where they are currently operational have a huge competition and they are lacking in all these businesses, which just goes to show that there is no clear focus for Paytm at the moment. It seems that they are trying to figure out what is working for them, what is not working for them by venturing into different areas at the moment. In fact, they also want to venture into insurance at this point of time, but their request for that has been rejected by the Insurance Regulatory Authority, which is IRDAI. Now let us try to understand their problem with numbers. Paytm Money and payments solutions provider, these two together contribute to 70 to 80% of their overall revenue, which means that for Paytm the dependence on these two businesses is extremely high. Now the downside here is that RBI, as a part of their digital payment regulations, has said that they are going to put a maximum cap on the wallet charges that these companies can charge from their customers. Now this is a huge downside for a company that earns 70 to 80% revenues from that business. Also, if you talk about payment solutions provider, this is an area that has been extremely dominated by UPI in the past couple of years. The emergence of UPI has been massive and is spread across all the cities. Within this space, Paytm is rapidly declining and is losing a lot of market share. PhonePe continues to be the leader here with 47% market share. Google Pay comes second with 34% market share. You talk about Paytm, it's only 10%. Now, during demonetization, this was an area dominated by Paytm. But today, Paytm ranks a distant third, with the top two players, Google Pay and PhonePe, contributing to 80% of the total market share. A huge negative point for the Paytm business. Apart from that, there are certain qualitative concerns as well. There are reports that the senior management of Paytm is also leaving their business. There are also reports that the loan ticket size for the Paytm business is extremely low at less than 5,000 rupees, which is why they are not able to scale up. Now combine the business model and you add all the problems that I have given you, it makes for a very sad proposition for the Paytm management. And this is why the stock price has taken a massive beating in the stock market. Half of the wealth of the investors has been completely wiped out. But now that you understand the business model, let us figure out if this explanation of this business model fits in their financials as well. So let us now take a look at Paytm's financials for the past 5 years. If you take a look at their revenue chart for the past 5 years, you will see that in a number of cases, their revenue is not growing at all. If you take the financial year 21 revenue and try to compare it with the revenue 4 years back, which is financial year 18, you will see that the revenue is lesser than the financial year 2018 number, which just goes to show that the revenues are not scaling up. And this also confirms the business model problem that I had stated to you. Because they are venturing into so many businesses, it seems that there is no clear focus on any major business, which is why their market share is eroding and the revenue figures are constantly going down. Now let us take a look at their profit chart for the past 5 years. Now Paytm is a loss-making company. A lot of you would already be knowing that. But the problem here is that their losses are also extremely unstable. You sometimes see an increase and sometimes see a decrease, which is why the overall financials of Paytm do not look good at the moment. But the major concern is, what should Paytm now do? Given that this understanding is extremely clear for the Paytm's management as well. What should Paytm management focus on? Let's find out. The first thing, according to me, is they should have a clear path for a sustainable revenue growth, which means that they should understand which are the major revenue drivers for them, not just now, but in the future as well, and focus towards that up until a point where they see that their revenues are constantly growing on a year-on-year basis. Because that is one thing that is not at all happening right now, because the revenues are in fact on a declining trend. So this is something that Paytm's management should look out for. The second area is a clear path towards profitability. Now, having a loss is not a problem right now, to be very honest. A lot of the investors are already aware of. The problem, as per me, is no vision towards profitability. It just doesn't appear that Paytm's management is working towards that goal. It just feels that they are figuring out what can be done. The sooner they figure that out, the better it is going to be. Investors would be keenly watching out for a time when Paytm starts to show a reversal in the loss-making trend. And if that happens, it's going to be an extremely positive sign for Paytm. Now let us try to understand what should an investor do at this point of time and what does the future for Paytm shares look like. Alright, so the Paytm shares are currently trading in the area of 950 to 1000 rupees. This might very well change. We might see a short covering in the future, and the reason for that is the drastic drop that Paytm's valuation has seen. Markets might finally start to respect those kind of numbers. But is it a good time to invest right now? I would still maintain a wait and watch kind of rating on Paytm. I am still not comfortable investing in a stock, investing in a business that does not have a clear sign towards either profitability or revenue growth. For me, I would wait on the management's commentary about their business performance. If there is a reversal there, if there are signs of improvement there, this is a stock that can be bought, but for now, I would maintain a wait and watch rating for the Paytm stock. Alright, this was the entire analysis of the Paytm business. I hope you liked it. Do subscribe to Finance Lens, and I'll see you the next time.